Imagine this. A 24-year-old software engineer buys an iPhone on a credit card, only $3,000 per month, the ad says. He taps once and walks out feeling rich. No cash spent, no pain felt. But over the next 18 months, that $75,000 phone quietly turns into 1.1 lakh. And the scary part? The bank loves this customer because the credit card business is one of the most profitable businesses ever created. Every swipe, every missed payment, every reward point, every EMI is part of a giant money-making machine worth trillions of dollars. In fact, globally, credit card companies process over $40 trillion worth of payments every year. And in India alone, credit card spending crossed 18 lakh crore recently. But here's the real question. If banks are giving you free credit, cashback, airport lounges, reward points, and interest-free periods, then how are they making so much money? Today, we break down the brilliant and dangerous business model of credit cards. The modern credit card industry started with a simple, embarrassing moment. In 1949, an American businessman named Frank McNamara went to dinner in New York and realized he had forgotten his wallet. Embarrassed, he later came up with an idea. What if people could carry one card instead of cash? That idea became Diners Club. Soon came giants like Visa, Mastercard, and American Express. But here's something most people don't know. Visa and Mastercard are not banks. They don't actually lend money directly. They are payment networks. The real lenders are banks like HDFC, SBI, ICICI, Axis Bank, and others. And together, they built one of the most addictive financial products in history. Let's simplify the system. Suppose you buy shoes worth $5,000 using your credit card. You think, I'll pay later. But behind the scenes, 4 players are involved. First, you, the customer. Second, the merchant or shop owner. Third, the bank that issued your card. And fourth, the payment network like Visa or Mastercard. Now here's the interesting part. When you swipe $5,000, the shop does not receive the full $5,000. A small percentage is cut as fees. This is called the merchant discount rate, or MDR, usually around 1% to 3%. That means the bank and payment network already earn money on every transaction. Even if you pay your bill on time, that's the first revenue stream. And it's massive. Globally, Visa alone earns tens of billions every year just from transaction processing. More spending, more money. That's why banks desperately want you to keep swiping. But transaction fees are nothing compared to the real jackpot: interest. This is where the business becomes insanely profitable. Credit cards often charge 30% to 45% annual interest in India. Some are even higher. That's far more than home loans or car loans. Now think about this psychologically. When people use cash, they feel pain while spending. But with credit cards, the pain is delayed. And delayed pain leads to overspending. Studies have repeatedly shown that people spend significantly more using cards compared to cash. And banks know this. That's why they offer buy now, pay later, no cost EMI, minimum amount due. That last one is the most dangerous. Imagine your bill is $50,000. The bank says, just pay $20,500 minimum. Sounds helpful, but the remaining balance starts attracting huge interest every month. This creates revolving debt, and this is exactly where banks make enormous profits. In the United States, credit card debt recently crossed $1 trillion for the first time in history. Yes, trillion. People are literally financing lifestyles using debt. Now here's where the business becomes genius. Credit card companies don't just sell money. They sell emotions, status, convenience, lifestyle. Why do premium cards offer airport lounges? Because once people feel premium, they spend more. Why cashback? Because humans love rewards. Even if you spend 1 lakh to earn 1,000 cashback. Why reward points? Because it gamifies spending. The more you spend, the more points you collect. It feels like winning. In reality, many people spend more than they normally would. And banks use data science heavily here. Every swipe tells them what you eat, where you travel, what you buy, how much you earn, whether you're risky, whether you're emotional spenders. Credit card companies today are basically data companies disguised as financial companies. Now let's talk about merchants. Why do shops happily accept cards even after paying fees? Because card users spend more. Research across retail industries shows customers spend significantly higher amounts when using cards compared to cash. That's why businesses tolerate transaction fees. In fact, many e-commerce companies are built entirely around credit-driven consumption. Big sales events from Amazon and Flipkart often push instant 10% cashback on XYZ bank cards. Why? Because banks want spending, and e-commerce companies want higher order values. It's a perfect partnership. But this business has a dark side too. Easy credit can quietly destroy financial lives. Young professionals often fall into a debt spiral. One missed payment becomes another. Then interest piles up. Then comes personal loans to pay card bills. Then comes stress. Globally, millions of people struggle with credit card debt every year. Even in India, rising consumer debt is becoming a serious concern. And yet, the industry keeps growing because modern economies are increasingly built on consumption, and credit cards fuel consumption. In simple words, the economy grows when people spend. People spend more when credit is easy, and banks profit from that cycle. So, the next time you swipe your card, remember this. You are not just buying a product. You are participating in one of the most sophisticated business models ever created. A business built on psychology, data, consumer behavior, and debt. For disciplined users, credit cards can be powerful tools, rewards, convenience, credit score benefits. But for careless users, they can become silent wealth destroyers. And that's the genius of the credit card industry. It makes money whether you win or lose. If you enjoyed this video, subscribe to the channel for more business case studies explained simply. And comment below. Have credit cards made life easier or more dangerous? See you in the next one.